Hello everyone, welcome back to the 2nd of July midweek updates on technical insights. This Wednesday morning, Asian market opened mixed as investors process the latest comments from US Fed and the June ISM manufacturing PMI data. Fed Chair Jerome Powell said overnight that the US Central Bank would have eased monetary policy by now if not for the US tariffs. The Fed Chair admission came as the US Central Bank entered into a holding pattern on interest rate since the December of 2024, despite mounting pressure from US President Donald Trump to cut the rates. Fed Fund futures pricing are now pricing in a 76% chance that the US Central Bank will once again hold rates unchanged at the July policy meeting. Overnight on Wall Street, the 30 stocks Dow Jones Index advanced 400 points or 0.9% to 44,494 points. Broad index S&P 500 index fell just 7 points after hitting a new all-time high on Monday at 6,215 points. While both the S&P 500 and the Nasdaq Composite Index hit all-time high on Monday, the tech-heavy index lost 166 points or 0.8% to close at 20,202 points, as traders rotate out from high-flying tech stocks that drove the equities market's second quarter rebound. The diverging performance of the Dow and the Nasdaq yesterday could be due to the US banking giant announcing plans on Tuesday to raise their third quarter dividends after clearing the US Fed annual stress test last week. US President Donald Trump's tax and spending bill also narrowly passed the Senate on Tuesday, and the measures will now return to the upper house to be passed by GOP lawmakers. With the 90 days US trade tariffs set to expire next week, traders will now be looking for more progress on trade deals and this Friday non-farm payroll report. Once these issues get resolved, the US Fed may get into the rate cut cycle again, and we should see further upside in the second half of this year. Back to Singapore, our SIAS index started the trading week slightly flat, down just 2 points or 0.05% on Monday, but catch up with the rally in the US on Tuesday with a 25 points or 0.6% gain to settle at 3,989 points on Tuesday after seeing both the Nasdaq and the S&P 500 ended at record highs on Monday. This STI rally seems to be continuing with our benchmark index hitting a new all-time high of 4,009 points this Wednesday morning. Week to date, we are up about 40 points or 1%, and year to date, STI is now up about 5.66%. All three local banks were also up on Tuesday, with DBS advancing 0.45% or 20 cents to $45.11. OCBC was up 0.55% on Tuesday or 9 cents to close at $16.40, while UOB added 0.17% or 6 cents to $36.06. The biggest winner on the STI index on Tuesday was Hong Kong Land, up 6.1% or 35 US cents to US dollar $6.12. This was after they announced that the company had repurchased 664,000 shares to be scrapped over the two recent trading sessions at a weighted average price of US $5.80 apiece. So for today's technical analysis, let's take a look at Hong Kong Land. The previous time that we covered Hong Kong Land was on the 28th of April video, somewhere around this period. The share price then jumped about 10% on that day on the announcement that Hong Kong Land sold the top 9 floors of One Exchange Square to the Hong Kong Exchange and Clearing for Hong Kong $6.3 billion. We then identified the support level at the 20 days and 50 days moving average in green and blue respectively at $4.35 and $4.37. But Hong Kong Land share price did not retrace and continued to rally to hit the 4th of November resistance level at the $5 handle over here. Fast forward to today, Hong Kong Land share price hit a high of $6.25 this morning, above their November 2021 high of $5.80. This could become the new support level for Hong Kong Land share price, with the 20 days moving average close by now at $5.63. Looking at the indicators, the MACD now has a positive reading, with the MACD and the signal line both trending upwards. This indicates that there's strong uptrend momentum present in Hong Kong Land share price now, and suggests that the uptrend will likely continue. The latest reading on the RSI indicator is now at 79 points reading, and has now entered the overbought region, indicating possible retracement, similar to the pattern that we saw in May and November of last year. Look at 11 analysts covering Hong Kong Land right now. 7 have a strong buy call, 1 has a buy call, and 3 has a hold call, and there are no sell recommendations. The 12-month average target price among them is $5.46, which the price now has already surpassed, with a maximum estimate at $6.80 and a minimum estimate at $4.14. Citibank research analysts raised Hong Kong land target from $5.16 to $6.80 yesterday, citing higher rents at the group commercial complex, The Landmark, and the company target for US $200 million in share buyback should further support Hong Kong land share price. Citi maintains a buy rating and raised Hong Kong land target price to $6.80 from $5.15. And these are the updates that I have for you this week. If you do find this information useful, do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insights.